And this is the chart that we've looked at for some time, which is on Bitcoin Wisdom. And this includes all the activity right through the last couple of seconds. We're trading at 7,094. You see over here on the right, 7,109, 7,120. Very large volume coming through. But this is the activity we saw today on a 4-hour chart. This is the last 4-hour bar. This is the one that took us down to 6,600. Now I'm going to go to a little larger chart, which takes us back to the peak again, right over here at 19,666. And I'm going to go one step larger to the weekly chart, where every bar is a week, to show the entire movement from $500 up to 20,000. And we keep saying that this is looking back in this period as we got into 2017 as a hyperwave. So we keep showing you this chart, which is our hyperwave model. And all of the 300 or so odd hyperwaves that I've identified over the last 40 years all do this same thing. 1, 2, 3, 4, up, 5, down, 6, up, 7, way, way down, all the way back to the beginning. Again, here's our Bitcoin chart. Now, in our last vlog, I debated a very simple proposition and said, I don't have enough evidence yet to say which of the binary conclusions is the right one. Back to our chart. The way hyperwaves move is they go through a period where demand is building but restrained. Then the supply runs out of gas relative to the demand, and the price begins moving up in phase 2. It does it again in phase 3. And finally, it goes through a phase 4 boom before the end of the hyperwave in terms of the good part, meaning the up part. Then it goes through a 3-phase correction, 5, 6, and 7. And one of the most difficult things about the analysis of hyperwaves is when you are moving from a 4 down into a 5 and back into a 6. And there's a lot of reasons for that. You've seen some of them on the examples that we've given before. Let's look at a couple of new examples away from the Bitcoin cryptocurrency world. And let's take a look at this company called Error Reduction. This chart is back in 1924 through 1935. And notice the angles as the price moves up in 24, 1925, 1926. You can draw a straight line under that angle. Then in 1927, 1928, it accelerates. A sharper angle than the first one. And then in 1928 and 1929, it accelerates straight up into the phase 4 ending boom. A sharp drop, which is a clear phase 5, going below where it was when phase 4 started. And then this unusual move back up, in this case, about 150% from 80 up to almost move up to 160. And then a long phase 7 down back to the beginning. But I wanted to show you this company because of what happened after 1932 and 1933. Another hyperwave began immediately after the cessation of the first one. Back to our chart. In other words, at the end of this 7, very often what happens is we go through a long period of time where there is no upwards activity. The Japanese stock market is a great example of that. There are many, many other ones, such as the NASDAQ market that we showed you before, from 1995 all the way through about 2009 before it started moving up again. But it is not impossible for a hyperwave, particularly very, very powerful ones, to regain their footing and begin another move. I'm going to show you one other chart, which is Adams Express, which is more typical, that after these accelerating first, second, third, and fourth moves, we get the sharp drop down, try to regain the old highs, and then we go all the way into a phase 7, going back to the beginning. In this case, from 1933, 32, 33, 34, and 35, no upward movement at all, as opposed to this company, Air Reduction. I'm going to quickly show again the NASDAQ market and the very long period of time of building up to this peak at 5,000 from very low levels before the sharp drop, the correction up, and then the drop all the way down to the beginning of the phase 3 movement before trying to work its way higher. Now, one of the other things that we talked about briefly is the fact that from this peak at 5,000 in the NASDAQ, it took us all the way to only 2 years ago before we regained that peak. That's not necessarily what has to happen. This NASDAQ market in 2002 and 2003, after bottoming out, began a climb until it was interrupted in 2007, 8, and 9 with the large recession we had, and we went all the way back down to the lows of 2003 before starting this move up. I'm showing you the NASDAQ market because what we are seeing from 2009 to the present, to me, could very well be the beginning of another hyperwave, but a massive one in the U.S. stock market. And I'm going to show you a chart of the industrials in just a bit. Okay, back to Bitcoin. Here's where we are today with this drop down to the lows of early this afternoon, 6,600. And what we have been saying is that since the peak at 19,666, we have 4 bottoms. None of them have held. Here's the first one, which occurred only 5 days after the peak on the 6th day. Then we ran up a little bit, came back down, came up for our second top. This is the first top, the second top. These could not hold, and we went to new lows. We rallied trying to overcome the resistance, couldn't do it. And throughout this period, we kept saying, be patient, be patient. All the downside targets are being hit, but then they're being taken out. And one of them that we were most interested in and talked about for a long period of time was the 9,000 to $10,000 range, where these tops occurred between 9,000 and 9,500. Here, the tops occurred throughout the 10,000 level. And then one of the biggest resistance lines that's difficult to show up unless you go far enough back, I believed was at the 11,100 mark. That's what began this recent drop when we couldn't hold 11,100 anymore. Then we couldn't hold the 10,000 area. And then we dropped all the way back to 7,600 and now to 6,600. And there still is no bottom in sight. So one of the tools that we use is one that almost everybody uses, called the MACD, or the MACD, or the Moving Average Convergence Divergence Indicator. People throw the term around a lot, but not too many people realize that this one also was created over 40 years ago. It was created by Gerald Appel in the 1970s and remains almost unchanged because it is such a powerful tool. And I'm going to look at the MACD going all the way back to the beginning of the move down around 500. And notice that we don't have red bars which indicate the crossing of the shorter term moving average and the longer term. In this entire weekly bar chart, if we go back slowly and look at what those two lines did and the green bars under them, you will see that only here, for a 1 week period, for a very short time, was there a tiny crossing of the two MACD lines. We go back further, and now we're all the way back in 2016, going on 3 years ago, before the MACDs actually crossed and held for a matter of weeks. And what we saw was a drop from approximately the 800 level all the way down in half to about 463. And then it took a long period of flatness, which is where the two moving averages crossed. Going back, there's other periods, very brief, very shallow, that these two lines have crossed. But when we come back to the present, and I'll make this larger so you can see, we've moved from 1,000 to 20,000 without the MACD crossing and giving us a sell signal. And now we've only been in this for 2 weeks, a little more than a week actually, because this week has just started. That's a very important consideration when talking about where is this going. We've dropped 65% approximately and have only recently begun this negative activity with the longer term MACDs. I am going to now bring up a tool that we have looked at together before, which is the stop and reverse point. We haven't looked at it as of today, but notice that just as with the MACDs, here we have only 4 weeks of negative activity where the price is below the stop and reverse points. And going back in history once again, just so you all understand how important this downturn is and remains, we'll make this larger so you can see only one bar with a stop and reverse point above it, all the way back to this bar, and then all the way back until we actually got some negative bars just about the beginning of this year, coming out of the correction where we moved from 700 up to 1200 back down again. So in terms of the number of weeks that have gone by without any sort of activity to the downside until the one we're in, and the crossing of the MACDs just 2 weeks ago, indicates this is an important downturn. Now, let's talk about Hyperwave again. I said yesterday that I don't believe that we are in a 5-phase drop, that we're still in a 3 going up. But to verify that, I need Bitcoin to hold above approximately 6,300. And there's nothing magical about that, except it is the phase 3 line coming from much earlier in the development of this hyperwave. If we're able to hold 6,300 on a closing weekly basis and move up from there, then I will be able to declare that we are still earlier in this hyperwave. Now, today made all of us rather nervous, depending on how close everybody was following the activity. The bottom that we hit today at 6,600 is only a very small distance away from my 6,300 drop dead zone. I was hoping that 7,500 was going to hold. It clearly did not. But since the market has closed and we have been moving up for the last 3 hours, we're back over 7,000 at 71.75. Remember I said that what is going to determine the next year, either up or down, is the determination of where we are in this hyperwave. Are we down here trying to hit a bottom, or are we still in a phase 2, phase 3 transition, which means we would renumber all of the previous hyperwave Bitcoin designations. And every day we're going to have to make that determination. If we can keep above 6,300 on a weekly closing basis, and I believe we're going to, even though we penetrate it during the week, then we are early in this hyperwave. If we cannot do that, if we drop below 6,300 on a weekly closing basis, which would be a Sunday night, and we close lower than that figure, which could happen in the next 6 days, 5 days, then I will declare that this hyperwave has ended, and we will have to drop back to 1,000 and see if the supply and demand can reset to form another hyperwave.